let's look at Twitter. First off, read this disclaimer carefully. Twitter here is under the megatrends, and it is, of course, it is social artificial intelligence / machine learning. It is, outperforming. Certainly, the theme is outperforming the S&P 500, and there are numerous stocks in here. Twitter is one of them. Let's just jump into the charts and the data. If you see the biggest performer here on the megatrends, it's Nanotech, which is 8,000% of the 52-week lows. That's pretty impressive. Okay, so we read the disclaimer and then we go to the investors relation page here for Twitter. Look at some recent news. I mean, Twitter doesn't need a whole lot of introduction. The thing about Twitter is that it is kind of like a crowdsourced news platform. It is quite popular, but they have had some issues with monetization. So that's not a big issue. And there's also the political risk, as far as Twitter quite clearly having a left-wing lean, which, it certainly, because what I think will happen, because of the politicization of technology, that we will see a splintering, that there will be a right-winged YouTube competitor, a right-winged alternative to Twitter, PayPal, and basically I think that the entire Silicon Valley will be split in half, and that is going to become a mess. But until that happens, we have to trade Twitter, and some of the Parler is one of those alternatives, but it's not publicly traded so far. Okay, so here's the seasonality of Twitter. You can see here that we are currently here in September, which is one of the weakest months seasonally. But it does improve a bit, the seasonality here into November. Let's compare it against the social media ETF, like that. Yeah, September is mediocre. It just is. And then if we take the S&P 500, like that. And this is the percentage of funds in which Twitter outperformed the S&P 500. So basically, not very strong during this season. Okay, let's look at the charts. So this is all the data we have for Twitter, weekly data points. So the first thing that jumps right off the chart, screaming, is that it's a hybrid. You have a rounding bottom-ish formation, but you could also make the case that we have a gargantuan inverse head and shoulders pattern. This is a messy shoulder. This is a huge head, and this is a very messy right shoulder. To be able to break out above, the neckline is kind of around here, so breaking out above that is something we have done. But because we have, it's not a successfully confirmed inverse head and shoulders yet, because of the pullback. Especially here, failing at this resistance level was a problem. Hence, breaking above here would be like the ultimate strong sign for Twitter. That would be like the full confirmation. The issue, of course, is if you are sitting on the sidelines, from our current level to that breakout, that is 18%. And if we do see some improvements here, then you don't necessarily want to wait too long. So it's a bit of that's one of the tricky situations about these technical patterns, is that if you wait until they have fully formed, then you miss the move. Then again, the problem, of course, is the seasonality, and you can clearly here see that Twitter likes to move in these cycles. There are these cycle patterns beyond the seasonality that we identified. So let's see how consistent the cyclicality is. See that the recent small cycles have been relatively consistent, which suggests that we are towards the later part of the current cycle. There are also some more major cycles as well. Let's see if we can find them. Cycle analysis is a bit of a combination of an art and the science, but you could make the case that there is some major cyclicality here as well. But this also suggests, unfortunately, that the current rising cycle is towards the end towards its end, which also fits with the seasonality we found on stockcharts.com. Okay, and we also here have an exhaustion candlestick. So it's a bit of a messy situation. We do have clearly lower highs on these major cycles. Potentially, I mean, this is not fully formed yet, but that would be a bearish sign. We also have recently some lower lows. That's also a problem. The accumulation distribution is not showing any bullish uptick here in buyers. We would like to see, if we look here at the RSI, we do here see lower highs and some lower lows actually as well. So there are issues here for sure with the charts. When it comes to the volume indicator here, it basically shows us whether there are buyers stepping in. During these consolidation phases, you ideally want to see actually this. You want to see a bearish divergence, where even though the price has been deteriorating, you want to see a higher high here, because that would show that there are actually some bigger fish that are building a position. But we don't have that here on the weeklies, unfortunately. There's a 47% correlation here with S&P 500. Okay, let's look at the daily data points. As far as the accumulation distribution, we're not really seeing, we're seeing a little bit of a build-up position here, but I would like to see more. Certainly would like to see more, and we are seeing a bit of a weakness here. It does like to move in cycles. When there are pullbacks, they can be significant. So there are signs here of some pullback on the horizon for Twitter. If you look here at some other metrics, there are options available. For sure, it is also shortable. I like to look at the average analyst price targets, because there's quite a few analysts here covering Twitter. Citigroup, JP Morgan, Goldman Sachs, the big boys. The problem is that the stock is currently trading for $39.87. The problem is that the analyst price target is $37.04, which means that the stock is currently 7% above the current price target. That's an issue. Especially given that many of these price targets have actually been increased as well due to, the stimulus from the central bank and all of that, but notwithstanding all of that bullishness, Twitter has just simply gone too far. Also, when it comes to these support lines, you see that Twitter did actually find rejection here at the upper end, so that's also a bit of a problem. Going to Saks.com, number 3 hold, the value score, the growth and depth momentum. They categorize it as internet software. I don't really agree, but yeah. So market cap, $31 billion US. Yeah, so to sum up here my take on Twitter. Okay. I think that the platform could be really good. I don't understand why they have all of these problems with monetizing it through advertising. It should be something they could pull off in a good way. It could disrupt potentially the entire news industry. But the big problem is that Twitter they just don't have that mindset. And on top of it all, they have really gotten themselves embroiled in the political mess by a bunch of deplatforming, and which clearly have been more negative for the right wing than the left wing, which increases the probability of the development and success of a right-winged competitor. And this is something you need to think about carefully if you're going to invest in these social media companies. There is a massive rift developing between the left and the right, and there's a lot of money on the right. There's a lot of money in social media, and the probability of these right-winged competitors is going up substantially. And that will make investing in social media stocks way more complicated going forward. Whatever you do, of course, don't fight the trend, and may the trend be with you.